Hey, it's Michael Saul, but everybody calls me Tiny. This video has the sell in May and go away trend started for 2017. This is market analysis for the week of May 22nd, 2017. So, hope you had a wonderful week last week. Let's take a look at the market. First, my Elliott wave count, 1 down, looking at this as 2 up, but we took out the March high, so I guess some could say, well, it didn't technically close above it, whatever, but yeah, for me, I'm not good enough to still call this a wave 2. So I'm getting rid of all this now. Could this be a different type of pattern, such as a double top here, a 2B top, a turtle soup sell, whatever you want to call it? Yes. Okay, could be all of that here. And last Wednesday, we got the sharp move down with more turmoil from president or regarding the president, maybe not from him directly. Don't want to place blame where it doesn't belong. I just find it amusing. I don't like to go on political rants, but it is just amazing that, oh, he's going to be impeached. Oh, he's going to quit. Oh, come on. He's not getting impeached. He's not quitting. There are a lot of people lined up against him, and he is staying up there, swinging the best he could. There is more to be seen here, and the first reaction to that is, oh, it's going to be a volatile summer. It's going to be a volatile summer. Yeah, I don't know. I've been saying for a while now that I think at a minimum we're going to form a large range. But I do think that we could pull back. I think that we could get a sell in May and go away event. I've been saying it. I'm not coming off that. However, I don't know if this is the start or not. All right, not enough evidence here. We did have the pop down, but we retraced the live range, which is the range that traded while the New York market was open. I know pre-market, after hours, whatever. The live range is between 9:30 and 9:30 a.m. and 4 p.m. Eastern. All right, so when the New York Stock Exchange is officially quote unquote open, that's considered the live range. We already got it back. We didn't quite fill the gap. So from here, we could absolutely pivot and come back down. We have to watch the 50-day moving average, which, by the way, I have changed to yellow after a request from one of my loyal YouTube watchers, and he asked if I could please change the 50-day from blue to yellow, so of course I obliged. I'm going to take a little time getting used to it, although I didn't screw it up the first time. I eventually did, I guess, but to me, I always mark my 50-day in blue. I've been doing it that way for over 20 years. The yellow I usually reserve for the 89 EMA. It's easy to just color code it, but don't really use that as much here. So the red is the 20 EMA, the yellow is the 50, and the white is the 200. And I was thinking of changing the red too because it kind of blends into the candles, but the 20 EMA has been red for me for over 20 years. I'm not changing it right now. All right, anyway, so yeah, this was a nice move down, and if we do roll back over, I want to watch last week's lows. We have a gap fill from back in April, and then we have this low down here from March at 231.61 that I want to see if it holds. And that would be the low of this range. Doesn't mean this range has to hold, and I still believe we're giving up the November rally this year. And I've been getting some emails, people telling me I'm nuts, and I'm making these big, bold predictions. And again, I mean, opinions and predictions are great, and they're harmless until you put money up on it. And I am not short here. I do not have a short signal yet. I am just talking about a bigger picture look. So if we start trading down and we get to the 200-day moving average, and we do get through that, more than likely after a bounce, and we continue to go, then yeah, I'm going to be watching for that. Okay, right here, all I'm looking for is to see if this fails, looking to see if we sketch out a range. Okay? Want to make sure I'm clear on that. I am not sitting here pounding my fist saying, okay, it's time, we're absolutely going lower, and we're going to take out that election rally low right here and now. One step at a time. The range, the 200-day, and then I think if it breaks the 200-day, of course there'll be Fibonacci grids to watch and all that stuff, but I think that gets taken out. And I still think there's a sell in May and go away event, and this could be the start of it, but as I said, not enough evidence yet. Now, if we just rip through and we just start trending higher here, get the momentum going, higher highs, higher lows from here, and just keep going, okay, well, then I'm wrong, and hopefully it doesn't cost me much to be wrong, and hopefully I don't lose out more on not being right, not switching and saying, all right, let's get long here. Okay, so that's how I'm looking at it, and I guess I could act like, yeah, I'll be right no matter what happens, and I'm positioned perfectly, and all this stuff. I guess I could take that kind of tone, but you hear that all over the place, right? You hear that with all the big gurus trading these small little stocks, and oh, how much they're making every day. And I mean, I guess if you want me to start talking like that, I can. I just really don't see a reason for it. Okay, to me, the market does not look certain that it's going either up or down. Okay, to me, there's a much better chance that it's range bound or at best starts to drip to the downside. But again, maybe there's more reaction to something with the president, and maybe there's more rumors that he's quitting or whatever it is, and we'll move faster. All right, so I want to watch the gap that was left open Wednesday. I want to watch last week's lows on the downside, and that's the spot. Here's the Qs. So the Qs also had the Wednesday down. All right, again, the live range almost gotten back to, this is the 50-day, see? Okay, so the 50-day would be next support if this were to roll and take out last week's lows. You also have some horizontal support from previous resistance up here at 133.48. Here's the Russell. Yeah, the Russell's been lagging for a while and is forming a range. Watch the 200-day moving average. Also, who knows how it's going to correspond with this low of 132.40 if it gets there, because the 200-day is still trending upward very nicely. Okay, the mid-cap, similar. Right, you got this low is a little bit farther away from the 200-day moving average, but more like a range than anything. Here's the Dow. Looks like the S&P. I would rather work on the S&P and the NASDAQ and the Russell and the mid-caps than care about the Dow. Let's look at some sectors. Okay, first we'll go to the semiconductors. I like to watch, and yeah, I mean, nice and strong. Did have the wicked Wednesday, but bounced it back. Let's look at some of the stocks. Clyde Tanker, I mean, it's hanging around this triangle here. Hasn't made its move higher, but definitely not saying, oh, this is a short signal here, right? It's not giving us that short signal. So, not happening. Here's NVIDIA, really strong, but yeah, I don't like this little candle. Okay, this is like a pause where it says, hey, you know what? We're not so sure here. Okay, so want to see what this means, this indecision means, see if it pulls back from here. Intel, still sloppy. It's under the 200 and the 50, but it's more sideways than anything. How about ADI? I mean, not a bad looking. I mean, don't like this distribution up here, even though it closed higher. I don't like the distribution off the high there. One I was looking at is this Xilinx. Nice push up higher. This is nice and strong, but again, it's overbought here, so I want to see what it does on the next pause. Pullback. How about the banks? Well, the banks are one of the reasons why I am not chomping at the bit to try to get long. Still in the spirit of a head and shoulders pattern here. May not be perfect, lined up or anything like that, but you do have the higher high, followed by the lower high. Okay, here's Bank of America. Looks basically like the index. Here's JP Morgan. Here's Citigroup, which is showing good relative strength to the others. Here's Bank of New York, not really doing much. How about Zion's? Yeah, or Northern. Right, so here's Northern, a little bit better looking relative strength-wise, but overall, just not looking so hot. Here's broker-dealer. Looks like the banks. Now, when I say not looking so hot, it doesn't mean, oh, look at the strong downtrend. No, but it's certainly not in a super strong uptrend. Maybe on a longer term time frame, but on the short term, no. Okay, I want to really see what Goldman does at that 200-day moving average. I want to see if we test it. Do we slice it? Does it hold it? It could show us what's what here for the financials on the short term. Here's Morgan. All right, let's look at some of the glamour stocks. Amazon's still acting well. Apple. Yeah, I mean, Alphabet. These stocks are all looking really nice. Here's even like a Netflix is nice. All right, what about Caterpillar? Yeah, look how sloppy Caterpillar was. It popped out. Now it's pulling back. And I know Caterpillar's not a tech stock, right? But here's your pullback here on it. All right, so not really a bull flag, but... And here's John Deere. Wow, just the nice pop-up. Biotechs. Yeah, biotechs, I mean, in the bigger picture, are still in this corrective channel here. So we want to see what's what. But on the short term, sure, an uptrend. And on the really short term, a coil. But nothing here screaming, oh my goodness, got to get long here in biotech. Look at Gilead. It's continuing to get beat. Here's Biogen. Here's one to watch. This is 5 Prime Therapeutics, FPRX. This is a bear flag here. It's been trending down since hitting the high in November from 60, cut in half. So, where are we looking at support? You got some short-term support from early 2016 at 28. And then below that, let's get to the weekly chart for below that. Okay, so we'll grab a fib. And yeah, I won't edit this. I'll keep talking, and we'll see if we could figure something out here. Okay, maybe I will edit this. If I don't, okay, there we go. All right, so let's see what I wasn't gonna, but all right, I'm still not. Let's see if I can get the 78.6 in there. Right, so that comes in right at about 25, a little bit high. So you'd call it 25.20. So if that gives way, looking for a full, that's not that good, sorry. Let's do that again. Okay, so now it's, 24.82. Well, around there, 24.80s. And you'll give it a little leeway in case my numbers are off by a little bit. So 24.90, 25, whatever it is. But if that gives way, look for a retracement back down to the sub 15 handle. Okay, that low is 14.70. So one step at a time. Has to get through 28 first, but just a stock to watch on the short side. Okay, let's look at bonds. Yeah, so bonds are still sloppy. They got the 200-day moving average. Looks like they want to try to test it. This is TLT, by the way. See what it does when it gets there. Oil, on the bounce. I think it could continue to try to get something going. Overall, it's really just in a range. But remember, we have that July 4th holiday seasonal high to watch. So we want to pay attention there. That's USO. Here's gold. And gold is all, there's gold. Okay, so you got a coil here. And again, I have a lot of, what do I have here? I have a lot of, let's see, get rid of this. We'll just delete that. I don't want to delete them all because I just drew one in. But we could get rid of these. Okay, there we go. So gold is trying to coil here, see which way it tips its hand as well. So back to the S&P 500. The gap left open. What is that? That's a close is open, high, low. Why isn't it showing me last? So strange. Okay, 240.08. Yeah, okay, there it is. 240.08. That's the gap. And then last week's low at 235.43. Don't know if we have started the sell in May and go away, but do think this bears watching, and I think we will get a hand tip sooner rather than later. See if this range fills out or if we're going to continue lower. Watch that 200-day moving average to come into play. Questions? tiny@attackthemarkets.com. Be nice if I knew my own email. Send me an email. I will be happy to answer questions you have. Don't forget to sign up to the site at attackthemarkets.com for intra-week updates. I look forward to talking to you in next week's video, but if you have anything coming up before then, just drop me a line or, like I said, sign up for the 100% free email list. Take care. I will talk to you soon.